This is going to be the only daily bias video you will ever need. Now, this video has been extremely highly requested, and it is bound that I made an updated one just showing you guys exactly how I approach the markets every single day. We've been going through some crazy times in regards to news and in regards to this whole government shutdown. I've made some readjustments in regards to my trading just to be more patient and careful when I'm picking my shots. This is going to be a lesson overall on daily bias and my approach to the market the entirety of this week, showing you exactly what my thought process is, my trade plan, and how I've been able to go about executing on top of 2 trades that I took today, a win and a loss, and my logic going into the day as to how I framed a narrative to my execution. So, without further ado, let's hop right into the charts and let's get into this entirety lesson. All right, so we're on the charts here and we're looking to frame daily bias. We're looking to try and understand how should the daily candle print. It doesn't matter what ticker this is, just know that what we're looking at is a daily time frame. So I want you guys to come into every single day of trading and I want you guys to ask yourself specific questions because this is very important. 1, where should the formation of the daily candle be? How should it form? Should it be an open, high, low close, or should it be an open, low, high close? Open, high, low close being bearish, open, low, high close being bullish. Now, where are the stop hunts for question number 2? Has price already ran a significant liquidity pool, or have we already ran into an external high, an external low, or an internal range liquidity pool, or has the session liquidity pools, aka Asia or London, has that been taken out yet? That's another question that you should be asking yourself. And after asking that question, if you have located the stop hunts, where is the remaining liquidity left to be taken intraday? Or if you cannot locate the stop hunts, you need to wait for the stop hunts to occur to then look for where is price, then looking to find its next liquidity pool. So if we go into a trading day and price is just moving in one direction going into your trading session, wait for price to then engineer some sort of liquidity, aka create some sort of stop hunt. And at these runs of either a session low or a session high or an external low or external high or an internal range liquidity pool, you want to be incorporating SMT divergence because SMT will be the trigger point for where price will be reversing from either the stop hunt or the external high or low or the session liquidity pools. Now, after you've asked yourself all of those questions, there's one final one after you have located the stop hunt and you've understood where should the formation of the daily candle be, and then you found a liquidity pool that you could target after you located a stop hunt. Has market structure aligned itself with the draw on liquidity? So I'll put this in a list right now. First one being, how should the formation of the daily candle be? Open, high, low close, open, low, high close. Is there any stop hunts that have occurred that incorporate SMT before your trading session? Where is the next draw on liquidity? And lastly, after you located the stop hunts, has market structure aligned itself with the next draw on liquidity? Write all of those down, and I hope that helps in regards to a checklist for a daily bias. Now, if I'm looking at this daily time frame, how would I be expecting the next daily candle to print? Based off of the fact that we have just been trading higher and higher and higher without taking realistically any previous daily lows. What would I expect? I would expect an open, high, low close. Open, high, low close into what? An internal range liquidity pool. Because how does the market move? The market moves from external to internal to external to internal to external. That is the trend of a bullish market. Impulse, retracement, impulse, retracement. That is it. I've been preaching this to you guys for so long now. So we have an internal range liquidity pool. We expect price after the internal range liquidity pool to go to the external range high because we're in bullish order flow. Yeah? How will we know price is ready to go to that external range liquidity pool? SMT divergence at the tag or inside of the tag of that fair value gap. looking to target, again, this external range high. We have a daily time frame, daily bias. Price draws into this internal range liquidity pool. We simply draw to the external range high. Moving forward, we have the same sort of situation. After price takes out an external range high, what are we doing next? We're waiting for another internal range liquidity pool, which is what we have here. How do we know when price is ready to go to the external high again? SMT divergence, right? So I can't just automatically assume if there's no SMT inside of this fair value gap, I don't know that price is ready in the next candle or in the next 2 candles, whatever it might be, to just take out that high. I don't know yet. I don't know until I have this. Until this occurs on my chart, the Kraken correlation between the correlated assets, that price is then ready to go to that external range liquidity pool. Just like that. All of our reversals are stemmed from SMT at key levels. That is the key. It's either an SMT inside of an internal range liquidity pool or an SMT at an external high drawing down into an internal range liquidity pool. It is not that complicated. It is very, very easy to understand. Now, obviously, this is just the basics. Now, I want to show you guys and walk down everything that I did this entire week as to how I framed a bias and how I went to an execution today in today's trading. So let's go from the Friday close into Monday's trading day. This is what we were dealing with. Obviously, a massive drop from that news with China. Okay, Monday was Columbus Day, so obviously we let Monday print, and this is what we were working with. We were working with just a daily candle within Friday's daily candle range. Obviously, this range is huge. Are we going to expect within the next trading day for price to automatically run the Friday low? Not entirely, but I'm still going to assume that price could be bearish after seeing that Friday daily candle print. So if we're going into the next day, how could we anticipate, based off of the questions that I gave you earlier, what could we be looking at for a potential for the daily candle formation? Could I be anticipating a open high low close or an open low high close? I would be anticipating an open high low close. Why? Because of 2 reasons. We have a daily bearish fair value gap resting here between these 3 candles, here and here. Answer number 2, we have a flat body open on NASDAQ, the S&P 500, and the Dow Jones. So this being a devil's mark while also having a bearish PDRA and close to that previous daily high with that Monday candle closure, I would anticipate price to go up into that gap, create some sort of SMT, and then trade lower to then target this low-hanging fruit objective point on any of the 3 in the triad. That was my daily bias and my game plan going into Tuesday. But this is exactly what happened. As you can see, this daily candle, when I woke up in the morning, we already tagged the daily bearish fair value gap and we traded down into that devil's mark. But this is the closure of that daily candle. Let's do a deeper dive and look at what happened prior to anything in New York session. So let's go from the daily, let's go to the 4-hour now. So this is our Friday candle range from that high to that low on all 3. And as you can see, is there anything significant right now in this sort of price delivery that we've gotten that we can utilize to our advantage? Here is Asia high resting here. And as you can see, everything here is correlated, right? And as you can see, the flat body open for the week on Monday, this was not reached on NASDAQ, but it was reached on ES and the Dow Jones. But here's the thing. I had this 4-hour bearish fair value gap came into play. I'm just looking for price to trade into an internal range liquidity pool, try and frame some sort of bias from that key level because that's the only key level that I have to work with here. Because I need some sort of external high, external low, and an internal range liquidity pool, any of those 3, to then frame something to go about my day. If I don't have any of that, I can't do anything. This is what happens to the next 6 a.m. 4-hour candle. We tag that new week opening gap. And now I don't even have anything else to frame longs off of. Even if I wanted to take a trade, I don't have anything to work with or any sort of reversal signature at this low for me to then even target an internal range liquidity pool. You see what I'm talking about in regards to I'm creating my checklist and I'm just looking for things that make sense to me to frame a trade of pure confidence. If I'm losing things as price goes on and I'm not getting things added up to then go into the market, I will have no problem staying away from the day entirely because I know that I will get something either later on in the week or maybe later on in that day once price clears up. So from this point on, this was the 6 a.m. 4-hour candle, including equities open. Let's go down to a lower time frame chart, the 15-minute. So as you can see here, this dashed line here, right here, this is 9:30 open on all three. As you can see, 9:30 open dropped aggressively right here. We don't have any SMT at the lows. We're just trading inside of the new week opening gap here and filling it. So this gray box is the 4-hour bearish fair value gap. Now, am I able here to frame something? If I took a trade here, let's say like if I took a trade on the Dow Jones right here, this down close candle that swept that short-term low and we closed above it, that would be my order block, right? If I took this trade and I longed that order block right there, targeting the 4-hour gap or even Asia highs here, and I posted that online, how many of you would have been like, there was no SMT, there was no SMT, there was no SMT? Practically everyone. And you would be like, why'd you go against your rules? Why are you not following your checklist? I'm following my checklist and I'm not doing that. I'm not taking this trade because you could see we even respected that order block. We traded through, ran into the 4-hour gap on all three of the triad. I don't care about moves like this. I do not. Why? Because I'm simply following my rules and my ways of execution. I'm executing only when it makes sense and only when my daily bias is connected to my intraday plan. That is it. I'm following all of my rules. I'm locating my stop hunts. I'm understanding how could the daily candle form, open, high, low, close, open, low, high, close. I found my stop hunt. There's no SMT at my stop hunt. I know my liquidity pool where price is going to target, which is that 4-hour internal range liquidity pool here. Market structure is aligned with my bias, but I don't have the most important key component here, which is SMT divergence. Therefore, if everything isn't checked off, I will not do anything and I don't care what price does. I will have no problem moving on into the next day. This is the 4-hour chart and how we closed on that 10 a.m. 4-hour candle. As you can see, we're still within Friday's daily candle range. We inverse that 4-hour gap here, inverse the 4-hour gap, inverse the 4-hour gap, but we're still within Friday's candles range. Do I care what price is doing within this range? No, I need everything to check off and then I will attack into the market. So this was Tuesday. Let's go on to what happened today, Wednesday. Daily candle printed here. What could I be anticipating for tomorrow's trading day? How could I anticipate price? So how could this daily candle print? Open high, low, close, or open low, high, close? I'm assuming that we're going to get an open high, low, close. Why? Because we're still within this daily bearish fair value gap here, here, and here. And we're still within Friday's daily candle range. So what could I assume? That maybe overnight in Asia or London, we run higher, we clear out a previous daily high, and then we go lower? Kind of like this. This is exactly what I would like to see. And this was my plan going into the trading day that I said to my group. I want to see either the previous daily high get ran, or I want to see the Friday's range high get ran. I want an SMT there, and then I want to see price displace lower for an open, high, low, close. That is all I want here. That is what my plan was, and that is exactly how I wanted to execute in those two ways. So let's go down to the 4-hour chart and see how this actually was planning out. Here is the charts on the 4-hour time frame up until the start of the New York AM session. And as you can see here, the bold black line is the previous daily high. And you could see that we actually ran it on the S&P 500. We failed to do so on the NASDAQ, failed to do so on the Dow Jones. So this was the read already. We had the open of the day, which was here, open higher. No sort of manipulation. We don't have any SMT on the 4-hour time frame. Nothing intraday at the lows. No bullish SMT that supports me saying I'm going to long the day. So that's the first thing that I said going into this trading day. Moving forward, 15-minute time frame at 9:15, right before equities open. So as you can see, that the Dow Jones on the right, we clear out that previous daily high. We clear out the previous daily high on the S&P 500. We still have yet to clear the previous daily high on the NASDAQ. But what do we also have below us? What is below us? I'm locating stop punts right now. I'm anticipating already the daily candle would be an open, high, low, close. Now, where are the stop punts? I don't have any. I don't have any stop punts lower for me to support bullish price. But do I have a stop punt higher? I actually do. I have a stop punt running this short-term high here. I have a stop punt running the previous daily high here and these short-term highs here. There's SMT at the previous daily high above here. So I'm now doing the next question. Where is the liquidity? The liquidity is these session lows below that have yet to be taken on NASDAQ, ES, Dow Jones. Next question. Has market structure aligned itself with the draw on liquidity? I have a rule. When we have no news in a trading day, I wait for the first 15-minute candle to print. That will give me an idea as to if I'm getting into a trade before 10 o'clock or if I can get into a trade after. One of those two. So let's see how the 15-minute candle prints from 9:30. Boom. Right here. We are on to that step of, has market structure aligned itself with the draw on liquidity? AKA, this was the trade that I took today. I wanted short, and I did take short at 24,960.5. I had my stop loss at that M15 candle that ran that short-term high, targeting just shy below London, which was also an hourly and a 4-hour bullish fair value gap. Now, this was a very unfortunate series of events because when I got into this trade, I got tagged in at 9:45. 5 minutes after I get tagged in, you'll see, Trump tweets out something in regards to tariffs and China at specifically 9:51. In that 9:55-minute candle, some sort of news came out about tariffs, price popped, went higher. I'm okay because I was saying to my Discord while this was happening live, I took this at a 0.5%, so I had another piece of clip in my chamber to shoot off and fire away. Now, with that 15-minute candle closure, what could I anticipate to probably happen next? Price to take out that previous daily high on the NASDAQ. But what else could I anticipate? The range high from Friday on the Dow Jones to get taken out. Because what would that create? SMT divergence on the daily time frame, especially if the NASDAQ cleans out previous daily high. So that is exactly what YM does. YM clears out the Friday high while the S&P 500 does not, and same with the NASDAQ also does not. So at this time, the NASDAQ, the S&P 500, and the Dow Jones, we have a major SMT at these highs, and we still have yet to take out any session liquidity below us. All we have done today is open higher. We have not gone lower yet. There's no SMT at the lows. We didn't trade into an internal range liquidity pool. We didn't have any sort of session liquidity ram. I am ready and making framework to short this market. So what did I do? I took it upon myself and I said it live to my Discord. I am taking a short on YM when we created that SMT at the high, closed below that specific up close candle that ran Friday's high, which is what we did here, and I market sold with my stop loss at that 15-minute candle high. But also, look at this. Look comparison. We have the SMT at the Friday high here, so our daily SMT, and then we have our second stage of SMT here. We have a lower high on the 15-minute here, which is where I market sold after seeing that 15-minute candle closure below that 15-minute up close there. Lower high, higher high on NASDAQ. We had strength leader that led to a weaker pair on YM, and I shorted the Dow right there. And targeting, boom, 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 boom. Next 15-minute candle, I was saying this also live to my Discord, market sell once we invert that 15-minute bullish fair value gap. So that is when I added into my next position and I targeted all the way down here. I wanted everything below us. We also had a daily flat body open, which was another means of looking for lower prices. With a lack of taking out the session lows, we have a daily flat body open, and that was the next series of 15-minute candles when we ran the 930 low, we ran London low. My average on the position was roughly about consequent encroachment of that 15-minute fair value gap. So once we did that, break even on the position, partials off there, and finally, that was how the cookie crumbled with my positions, my executions, everything like that. That is how it all played out. That is how I came into the day with a loss and then still making a win because I stuck to my plan, I followed my checklist, and it ended up playing out. I did the same thing for Tuesday, and it saved myself because nothing aligned with my model. Nothing aligned at all. I asked all the questions. I was missing the most important factor, SMT. I asked all the questions today. It had everything there for me, and I took the trade based off of my plan, based off of my checklist, and it ended up playing out. And unfortunately, on the first trade that I took, just because of the tariff talk, that messed me up. But the second time that I took it, I was in there for the entirety of the move because that was my plan, and I followed my plan based off of the daily bias that I formulated. I hope that this was a valuable lesson for you guys, and I hope it clears up a lot of the confusion that you guys have in regards to framing a daily bias, getting your executions off, and all that sort of stuff. But if you have any questions in regards to this video, in regards to the trades that I took, and in regards to the structure of how I listed daily bias, let me know in the comments. I will answer every single question that you guys ask me. But I hope you guys all have a great rest of your trading week and be safe. Follow these rules. I hope they help. And I will see you again for the next upload. Be safe, everyone. Deuces.